Welcome to TradeTheMBI.com. This is John's report is for the 8th of February. No surprise on this move. We had already had our magenta over yellow. We saw a brief increase in short interest, but at the same time on DOC, green midterm buyers had already overtaken shorts in the cyan, and they were declining steadily on rising shakeout here. So it was just a matter of just getting enough little extra short increase to drive the push. Now at 50-12 at this particular stage, we would be looking for somewhere in the 50-23 to 34 range before you would see typically some type of pullback. But in a strong momentum, that can carry all the way through to the 50-50. Do we have that kind of momentum? Yeah, not so much, but you know, again, exuberance and anyone caught on the other side of the trade or lagging is definitely going to have to play catch up on this. The NQ also pushing to highs, not quite as dramatic, but nonetheless still an even push, a little bit stronger from a short interest there, and but clean, cyan under red, always buy. So don't even have to think about that. From a treasury standpoint, still out of line with the realities of things. And at some point, the uh, job warning of the Fed versus reality is going to sink in. And, if they're not actually actively cutting, uh, there's going to be a pushback into raise yield. And, uh, with the theoretical less need for Treasury purchases, though, maybe the demand's soft enough. Of course, if we believe that to actually be the case, it'd be one thing. But the positives for the market are this continued stalemate in Congress, where nothing seems to be moving, which is a dream come true for the markets. They always love gridlock because nothing gets done, which means things can continue without being oppressed by government intervention, unless it's government intervention they want, which is a lot of easing. From an oil standpoint, still in a reasonable range within this continuation over the last month plus. Actually, it's been almost since November. We've been in this range, right in the middle there. It's not great. It's not horrible though, and that's the key. Not horrible means that things can continue. You push back towards that 80, becomes a different story. It puts even more pressure on the Fed to not even consider rate decrease, but potentially having to do more to quell things. And with the U.S. Reaching record production in these last couple of weeks, it could be enough to sustain things and move it along, assuming economic demand justifies it. But a significant drop in oil prices would certainly aid economic activity quite significantly. The euro, again, filling that positive extreme from back over here in November, and still way elevated for what it is. And if oil rises, it's going to continue to be under pressure, and certainly should be close to parity as it is now, given what's going on in the Eurozone. More strikes and gridlock as far as farmer protests and that, with the regulations trying to end food production. Won't even go there, but strange. Uh, Bizarre, actually. Gold not having any real push because no incentive for anything. It's also not weak in that standpoint either. It's already filled out the softness that came through with the idea that there were going to be rate cuts. But now, as that sort of tones down, just like in treasuries, just a sideways move. What was more interesting was the move in crypto. We talked about this with this giant short interest jump that took place, and then, like I pointed out, it was a lot of that FTX selling to liquidate for covering its creditors for the bankruptcy situation, and that left exposed a great opportunity because within that short really didn't move much in price. So as soon as that pressure was alleviated, nice bounce. So um, well within the expectation we had. And that was just a matter of getting magenta back over yellow, and breaking that 50% was enough to motivate new buyers. And ETH likewise, a little bit better performance there, but it had suffered a bit more. So I think that we're closer to parity now than we've been, and it's just a matter now of watching them from an equivalent standpoint. But clearly gaining momentum on the crypto side, and I think that probably going to be a banner year on the crypto element. But from a 50K standpoint, the other day we recognized that buy was right around 49.67 and a quarter. So adding into it along the way and all the way back up here. Um, Steel dipping down here under the negative 13 point. A little bit of weakness with that, but not much. And as soon as it pops back above the negative 13, you get a continuation. You can see once we started to get the rise of shakeout gold, it began the stabilization and lifting of this. And then once the shakeout went positive, it was off to the races. So it's an easy way to gauge how that works, and worked out perfectly. So no shocks with any of that. Intraday was pretty clean pre-market. End of the European session started to skyrocket, continued. Then the blast as soon as the regular markets were just about to open, and then it just went sideways from there. So if you weren't in the European session, and that didn't see a whole lot of activity, leveled off slightly below the highs in the post market, and here we've seen a little bit of sporadic weakness, but not a whole lot of activity taking place at this particular stage. So you know, this is what the market movers will do. They move things in the pre-markets where there's lighter liquidity, so that when the new money comes in for the regular day, it just makes it easy on them. As always, though, anything relevant, I will certainly put up on SkyChat. Have a good one. Trade well.